Greetings. Welcome to my weekend market recap, 11th December 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I develop. This is my email ID, my website, YouTube channel, and Twitter handle. I regularly share live market and stock analysis through these channels. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use these Q systems for my trading. They are add-ons to the TradeStation and Metastock platforms. Let's continue with the live systems. We start by looking at the global markets. First, the Australian market. Australian market. Let me get my drawing tool. Australian market is moving sideways now. This is all ordinaries index. It is inside a wide range created by trendline resistance at the top, trendline support at the bottom, and it is also bound by watermark resistance and watermark support. Now if we look back, two times in the past I suggested reversal from the box pattern. One was at this point when it reversed after displaying multiple indecision signals and bear release signal. Then I suggested taking a short call vertical trade, and I showed that the trade would be very profitable. Of course, it came down to the opposite end of the range. And in the previous roundup, 1 week ago, when it was at the lower edge of the range, I mentioned that it is likely that all ordinaries will go up from there, and that happened. Now it is in the middle of the sideways range. That's a no trading area. When it is moving inside a range, we try to short at the top, buy at the bottom, and in this case both those sideways range box setup trades were profitable. Now there is no trade setup. We will wait for the next trade in the coming days. Australian market moving sideways. What about Topix index, Japanese market? That is also moving sideways. The daily is inside a triangle pattern, and the weekly is also inside a triangle pattern. It is in the middle of the range, so we'll avoid taking any directional trade in the Japanese market. China market, CSI 300 index. It was moving sideways for a very long time, bound by trendline support, and there was trendline resistance at the top. We can see the trendline resistance is there in the weekly. Trendline support is also there in the weekly. This week, both the daily and the weekly broke out of the trendline resistance. Again, following the principle of buying at the low of a sideways move, we could buy at all these points, preferably using short put vertical. All those trades would end up being profitable trades. And now it has broken out to the upside. I do not like to take breakout trades like this, especially box breakout trades like in this case, because the stop loss below the current low would be far away. Instead, I may wait for price to pull back little bit, probably to the upper edge of the sideways range, this watermark pivot level, and then for price to tilt up from there, giving me a low risk go with flow trend following long trend. Because it broke out, CSI 300 is not in a sideways range anymore, it is in an uptrend. The sideways range has broken to the upside. What about UK market Footsie index? That is also moving sideways, bound by trendline resistance and support in both weekly and daily. And in this case, unlike in case of Australia and Japan, it is at the upper edge of the range, and on Wednesday, Thursday both, we had bearish indecision at the top at trendline resistance and also watermark pivot resistance. On Friday, the traffic candle color turned yellow, neutral. Up to Thursday, the traffic light color was green. That would not allow us to take any short trade. Friday, we have a yellow candle in daily. Does it have any box short setup on Friday? No. If we apply the unambiguous checklists for the box trade setup, we don't have an exact match. Why? Because the box setup requires the weekly to be yellow. That condition is not met. And also box setup requires the daily to have one bear release signal. Those conditions are not met. Therefore, we may not take a short trade in Footsie itself. However, when Footsie is reversing from the upper edge of a sideways range with indecision signals, traffic color turning yellow from green, you may look into the underlying stocks and probably you will find a short setup in one of the weaker fundamental stocks. Why I say that? Because Footsie has come down from the top. Therefore, the weaker stocks in Footsie must be more weak than this. They are more bearish than the index itself. That's why they are weaker stocks, and you may find shorting candidates in those weaker stocks which are fundamentally weak and also in weak industries. You may check the constituent stocks for such short setup. How can you analyze the constituent stocks? You may do that using Q index. I am using an unified version of Q Vital Q index. Let's check out the index constituents for Footsie. If it is not in the drop down, that is fine. We may type the index Footsie, and in real time it will look up the constituent stocks. You can see all have suffix of .l, that is for London Exchange. First we can have a look at the overall view. Over 1 month, 56% of stocks inside Footsie index were down 44 78% was up. After that, over 10 days, it became more bullish. Over 5 days, it became even more bullish. However, over 2 days, that is Thursday, Friday, it is bearish, and over 1 day, Friday also, it is bearish. Remember what I mentioned just now, and I am doing this analysis live. I did not look up the Footsie index charts before. I anticipated a weak day in terms of advanced decline breadth in Footsie because it reversed from the upper edge of the sideways range. So 78% of the stocks went down. Now I may look at the constituent stocks, carry out a complete fundamental scorecard analysis. So now it is retrieving the detail of this 101 Footsie constituent stocks. Once the data is retrieved, now it is calculating the scorecard. Though I am demonstrating this in the UK market, because UK market was the appropriate market to look into the index constituents, you are able to apply this in any market, be it UK or Australia or India, Japan, China, and certainly in the USA market. I'll not go through the entire workflow, but let's have a look at the Footsie constituents. And because I am looking for bearish trades, I like to look for fundamentally weak stocks, at least in terms of valuation or in terms of earnings growth. And you can see many of the stocks don't have quarterly earnings result. In that case, you may look for yearly earnings growth. And you can see in this case, using valuation, it found total 23 stocks. Out of that, only 13%, 3 are up on Friday, and 83% is down. You can see this percentage up and percentage down is clearly showing that when we choose fundamental stocks that are weak, we will find many more stocks going down than up. And we can see from this column that many of these fundamentally weak stocks that are Footsie constituent went down by more than 1% on Friday. Now you may look for trade setups, bearish trade setups in these stocks. I'll not go through the entire workflow, but that is how when you see that an index is toppling over, but the index itself doesn't have a short setup, you may not want to trade the index or the future of the index. Instead, you drill down and look for weak fundamental stocks, and further you would have looked for stocks in weak industries as well. In any case, Footsie is also moving sideways like Australia, Japan. Difference is that it is at the upper edge of the sideways range, and we are able to look for low risk reversal short setup in underlying stocks. What about India's Nifty 50? Nifty 50 was the strongest global market for a long time, and the weekly is still in an uptrend. Now, let's look back once again. When the bearish headwind came in the weekly chart, right at that time, I mentioned that it could be the time to protect profit in long trades and start taking short trades. And I did the same. Now it has come down, found support at one of the direction lines here. We had an indecision shape candle 1 week ago, and now we have a bullish shape candle. Also, the backdrop color was magenta or bearish for all the weeks since the bearish headwind came. And now it is the first week that the magenta color has given way to neutral yellow color. Looking at the weekly, I am happy to look for buy trades. However, when I look at the daily, it is inside a range. Interestingly, Nifty 50 displayed a bullish headwind possible reversal signal on this day, and since then price has recovered. For the last 3 days, Wednesday, Thursday, Friday, price is not going up much. However, the traffic light color has remained green, and all these 3 candles are also bullish in shape. So if I have to anticipate, I will anticipate that price will continue to go up, and then we have to see whether it is reversing from the trend line resistance or is it able to break out of the trend line resistance. Because it is inside a range, that is a triangle pattern, and it is in the middle of the range, I am not going to look for a buy setup in Nifty itself. However, just like I explained in case of Footsie index, you could look at the constituents of Nifty, find out in this case strong fundamental stocks in strong industries, and look for low risk buy setups in them. Nifty 50 is also moving sideways. That completes our study of the global markets. What did we see? All the markets are now range bound except the China market. Isn't it interesting? China market was range bound almost forever. It seems for a long time, in spite of all the crises of Evergrande and other companies. The other markets are going up, sometimes sideways, but China market was always sideways. And now when we have the news that apparently Evergrande and also another real estate large company, I think its name is Kaisa, both of them have actually defaulted. China market didn't fall down, it broke out to the upside. That once again shows it is okay to look at the news, but we make our trading decisions based on what the market is doing. And what the market is doing is evident from the index charts, future charts, ETF charts, and the market breadth analysis. The global markets overall, we must say that it is moving sideways. Now let's see what the USA market is doing. And let's continue to use Q Global. I find it quite easy to open and look at the charts using multiple templates on Q Global. Let's look at the market ETFs starting with QQQ. Now once again, you see, if you remember or if you didn't watch, you may watch my previous market roundup video 1 week ago. Almost everybody that I follow, be it on chat groups or YouTube videos, almost everybody were bearish 1 week ago. Either bearish or they mentioned that it is not a time to buy stocks. What did I mention in the previous market roundup? I looked at the candle patterns for the market ETFs. I looked at the market ETF and I mentioned that I would look for buying, but except for technology stocks, QQQ kind of stocks, because QQQ was the weakest, and even the weakest one, this is QQQ, even the weakest one went up on Monday, displayed a bullish indecision, candle color turned neutral, and then on Tuesday it had a gap up move, further higher closing, traffic light turned green, and for the next 3 days, Wednesday, Thursday, Friday, traffic light remained green, moved sideways. The weekly backdrop turned bullish. It's a reversal from magenta to cyan, sudden reversal without going through the neutral intermediate color. We can see in daily it went from red to yellow to green, but in weekly it reversed directly from magenta to cyan. So weekly had a sudden reversal and daily went up after displaying the bullish indecision. If we look at the alternate signals, we see it had a 3-month big move up that came on Tuesday. That was a very bullish signal. Prior to that, it had come down and found support at the 50-day moving average. So I pointed to the 50-day moving average in the previous market roundup and the candle moves in the daily chart and mentioned that it might find support there. That was QQQ. QQQ was not the strongest when I studied the market in the previous video. Let's look at SPY. Here we had a stronger pattern. The weekly came to the trend line support. These memory trend lines automatically drawn sometimes from nearby pivot points, sometimes from far pivot points. As in this case, they provide excellent support. Price sharply recovered from the trend line support. This week closed with a very bullish shape and sudden reversal, bullish color candle, sudden reversal from magenta to cyan without going through yellow. Here the price move in the daily is also very strong. Tuesday had a strong up move. The next 3 days remained bullish in color. Friday closed with a bullish color, bullish shape. In daily, it found support at the 50-day moving average, which I analyzed in the previous market recap. Like in QQQ, we had a 3-month big move up on Tuesday, a very strongly bullish pattern. Since then, price is remaining at the elevated level. It is very close to making another all-time high, very close. Looking at the weekly daily, if I have to anticipate, I'll anticipate that it will go up and make a new all-time high next week. Now, is this the best buying point? Other people may be thinking so. However, for me, the best buying point was 1 week ago. That is when I mentioned explicitly that it was time for me to start buying stocks. In fact, I shared some buying ideas, at least one, on my public forum, and that hit the profit target the very next day. I did not share any bearish trade in last 1 week. SPY did exactly what I anticipated and shared publicly 1 week ago. What about DIA? In the previous roundup, and it is important to look back and see how we analyze the market using Q systems and how the market turns out afterwards. 1 week ago, I showed that DIA came very close to the weekly trend line support. These work very well, and I anticipated price to recover upward. That happened. Once again, the backdrop color flipped from magenta to cyan in weekly chart. In daily, it sharply recovered. Friday has bullish shape, bullish color, and as you can see from Tuesday to Friday it went up much more in comparison to what we saw in case of QQQ and SPY. So Dia is the strongest one, not very far from making another all-time high. Looking at weekly daily, it seems it will go up. Is this the best buying time? No, as I mentioned, the best buying time for me would be at the swing low point, not now. Now also you may find buying ideas, but I would have started to buy at the swing low points. Lastly, we look at small cap ETF IWM. This was the weakest of the 4 market ETFs in this range. Last week in the market recap, I mentioned that it was close to the lower end of the box pattern in the weekly chart, and therefore it was more likely to go up than come down. It did go up, but not as bullishly as the other market ETFs. One immediate thing we notice is that here the backdrop color has remained bearish, didn't turn bullish, didn't even turn neutral, remained bearish. In daily it did try to go up but fell down again. Closed higher than 1 week ago. We see that from the weekly activity bar being green, but this is the weakest of the 4 market ETFs now. Therefore, if I am going to buy in the market, I may not buy small caps now. Instead, I would look to buy industrials. Dia is very strong, and I could also look to buy mega caps or large caps, that is S&P 1500 constituent kind of stocks. Is that the conclusion we'll arrive at if we look at market internals? So far we looked at market ETFs. We could look at market futures. I leave that to you. We could look at market indices. I leave that to you. All these provide the outside view of the market. Like a patient going to the doctor, doctor may check the outside features and decide something about the illness, but a more complete understanding is achieved by looking at the internals, be it of a patient in case of medical checking or be in case of market. The internals are viewed from Q Global Market Breadth studies, and there are some studies in Q Elite also. Let's look at the, why don't we look at the market breadth in Q Elite first. I didn't do a thorough study of this. Let's look at the two composites. The Nasdaq composite on the left, NYSE composite on the right. Let's look at advanced decline for Friday. The advanced decline started bullishly. However, soon after for Nasdaq, it crossed below zero, remained below zero for most of the day. Same thing happened for NYSE. Advanced decline started high, soon crossed below zero and remained below zero for most of the day. So Nasdaq and NYSE as a whole, they were not strong on Friday. However, the weakness was not severe. That we can see from up-down volume. Up-down volume slightly went below zero but didn't continue to go down. On a bearish day, you will notice that advanced decline may stay at the same level. That is fine. It may stay at the same negative level throughout the day. If the day is bearish, the up-down volume will continue to tilt downward. That did not happen on Friday, not even for the broad exchanges, Nasdaq and NYSE. And look at Thursday's pattern in comparison. The advanced decline on Thursday for Nasdaq started below zero, remained below zero throughout the day, and this is how the week volume pattern looks like in terms of market breadth. The up down volume continues to tilt down throughout the day. Same thing happened for NYSE on Thursday. The advanced decline started below zero, remained below zero. You notice advanced decline did not necessarily go down. That is normal. But if the day is bearish, the up-down volume will continue to tilt downward. That did not happen on Friday. Therefore, though advanced decline looks bearish, it is not that bearish when we study the up-down volume also. That is a view of the broad exchanges on Friday. We are looking at intraday breadth on Friday. Why we are doing that? We want to know Friday closing is bullish or bearish. We looked at the market ETFs and overall the market ETFs looked bullish except IWM on Friday. That was, as I mentioned, an external view, outside view of the market. Now we are looking at the inside view, and the inside view is telling for the overall broad market using Nasdaq, NYSE exchanges or composites, Friday was bearish but not much bearish. That we know from the up-down volume pattern. That is broad exchanges. What about the major indices? That is Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500. Russell 2000 advanced decline opened higher soon after that, crossed below zero and remained below zero, moved sideways. That is normal. We don't need advanced decline to keep going down to know that the day is bearish. It can remain below zero and at the same level. But the volume here continued to go down. What does it show? It shows that not only that small cap Russell 2000 was weak on Friday, it was even more weak than Nasdaq and NYSE as a whole. The telltale pattern confirmation of that is from the up down volume steadily going down throughout the day. That is in contrast with the other major indices. For Dow Jones Industrials, remember in terms of ETF, outside view, we saw Dow Jones Industrials was the strongest. Now we are looking at the internals. The advanced decline opened above zero and remained above zero throughout the day. And telltale pattern that it was strong throughout the day is that the up down volume continued to go up. And we see the same pattern for Nasdaq 100 advanced decline and up down volume, S&P 500 advanced decline, up down volume. So when we look at the market internals, like using MRI or CAT scan, etc. I'm not a medical expert, but something like that. We are looking at the internals, and now we have a very clear idea about Friday's market. Only small cap was weak. Neither the broad market was truly bearish, nor the major indices like Dow Jones, Nasdaq 100, S&P 500. Only small cap was weak. That is our view of the market on Friday using Q Elite intraday market breadth. Now let's take a longer view and look at Q global market breadth. I have added all the breadth studies also to my custom menu. Let's look at the Nasdaq and NYSE over longer period. Let's look at the percentage of stocks above 50 MA. It came down very close to the red line, which is the 20% area. And as I mentioned earlier, whenever the yellow line, the percentage of stocks above 50 MA, comes near 20% line, I am looking to buy. That was true for Nasdaq 1 week ago. That was true for NYSE also 1 week ago. That is why, as I mentioned in the previous market roundup, I am starting to look for buying. From there, the yellow line went up. Where is it at present? Nasdaq is around 26-25%. Where is NYSE? It's close to 40%. If you remember previous roundups, the difference between Nasdaq and NYSE was about 10%. NYSE was stronger. Now the difference has increased to 15%. NYSE yellow line is about 15% above that of Nasdaq. That means we are going to continue to look to buy, but not Nasdaq stocks, NYSE stocks. That is the value of studying market internals. We know where to look for buying, where to look for shorting. Overall, the market ETFs are bullish. So we look to buy, and where we look to buy? We look to buy non-Nasdaq stocks, NYSE stocks. Where is 3-month new high low? It is in the middle for both NYSE and Nasdaq. For Nasdaq, it is more to the lower extreme, but not there yet. For NYSE, it is in fact in the upper half. This also shows that NYSE is stronger than Nasdaq. And one more time, you can see that when 3-month new high low reached the upper extreme, immediately after that it pulled down. That happens over and over again. Here it reached the upper extreme, pulled down. Here it reached the lower extreme indicated by the two horizontal lines, then it tilted up. For Nasdaq, it hit the lower extreme and tilted up. Hit the lower extreme, tilted up. Every time the 3-month new high low, be it on the composites or on the major indices, every time it hits the upper or lower extremes, we are looking for a reversal. Now it is not at an extreme. We can only infer that Nasdaq is weaker than NYSE. Let's look at the market breadth total view. There are other things you may read from the market breadth studies. To save time, I am not pointing to every insight from the studies. Let's look at market breadth total view. This is the complete view that is calculated combining the two composites and 4 major indices. Let's look at the percentage of stocks above 50 MA. It came near the 20% level, not quite there, and recovered. It is near the 50% level. Three-month new high low. It is in the middle, in the upper half, but in the middle, not at the extreme high, extreme low level. Therefore, it is bullish, but we are not bullish so much that we can expect a reversal, not too overbought. Bullish because it is in the upper half. We had one distribution count on Thursday, but one is not a major count. That count came from which index? It came from Nasdaq 100. That is again showing from a different angle that if we are looking to buy, we may avoid technology stocks, Nasdaq composite constituents or Nasdaq 100 constituents, broadly speaking. Nasdaq kind of stocks we may avoid because we had a distribution count only from that on Thursday. Growth versus value. What is doing better? Overall, the magenta line, growth versus value, is tilting up, so growth is doing better. What about small cap versus large cap? Sharply tilting down, therefore small cap is doing poorly. Therefore, broadly speaking, if I am going to look for buy setup, what kind of stocks I am interested in? I am interested in non-technology stocks, non-Nasdaq kind of stocks. I'm interested in growth stocks and I'm not interested in small cap. So growth, large cap, non-technology. What kind of stocks that may be? That may be consumer discretionary stocks, that may be consumer staples even, if there are consumer staples that are growth stocks at present. Or I may look for industrials, which are usually, which may Dow Jones, at least Dow Jones constituents will be large cap. Large cap is doing better than small cap, and we may find some growth stocks there at present. That is how the market breadth is telling us what kind of stocks to look for buying. Overall, the market is not bearish, so I am not going to look for shorting, and my bullishness came 1 week ago. That is continuing. In fact, one more thing I wanted to point out, and this is a great testament of Ian Edwards' teachings. I never had an opportunity to meet him or learn from him. May him rest in peace. I came to know about him from Dr. Jeffrey. And the more I study the market level indicators created and or popularized by him, the more I am able to get on the right side of the market. Let's start from the series of Hindenburgs, and even prior to that, the warning shot about the Hindenburg. In Q Global Market Breadth, the first occurrence of Hindenburg is in yellow color. First occurrence is not significant. When we have a cluster of them, and we did have a cluster of them, many of them coming one after another, that was a true omen, and since then market dropped. Not a precipitous drop, but it dropped. Now, did we have some alert even before the Hindenburg yellow signal? Yes, we had a number of these up arrows. These are Bango. Bango are overbought condition, exuberance you may say, in the market. So we had exuberance. When we have exuberance, doesn't mean we are going to short, but we are cautious that it is probably irrational exuberance when they keep on coming, especially at the top. Bango usually comes at the top. It came here also, and then market came down. We wouldn't short just because we have Bango, but we would be cautious. So we had multiple Bango exuberance signals in the market. These are breadth studies, not individual stock studies. Then we had one Hindenburg warning, a cluster of Hindenburg, market drop. What did we have after that? We had a bingo. Bingo is baby out of bathwater. If Bango is exuberance to the upside, Bingo is selling everything, everything of even value, high value, selling everything, irrational selling you may say. Immediately after Bingo, price stopped going down. That was 1 week ago. So Wednesday had a Bingo 1 week ago. Thursday market stabilized. Friday price tried to go down but closed higher than Wednesday's low. This is exactly what I read in previous market roundup, and I thought that because baby out of bathwater had come and the memory support was there in multiple market ETFs, market futures, I expected a market recovery. What I would look for after bingo to confirm a market reversal, I would look for an Eureka day. Eureka day is a follow through day, but we don't have to calculate ourselves like in IBD style, CANSIM style of trading. We don't have to calculate anything. Whenever we see a cyan color in market breadth total view or in the composite view for individual composites, NYSE and NASDAQ, cyan color means Eureka. After Eureka, price has not come down. It has stabilized and the market ETFs are looking bullish. So I expect the market to go up. Is it certain? No. But when did I start buying? I started buying long time ago. I might have booked partial profit already in long positions. And even if I get stopped out, my stop would be low because I started buying earlier in anticipation, and then Eureka Day did come. What does it mean? It also means, other than the fact that Ian Urar's teachings were great, it also means that if you wait for follow through day or Eureka Day, that is perfect. That's also fine in canceling methodology or HSA methodology. But if you look at the market holistically day by day, every day, you may not need to wait. Mostly you don't need to wait for the Eureka Day or follow through day. You can start to buy before that, like I did and like I publicly shared. With the Ian Woodward breadth indicators and the Q breadth indicators, everything together in Q Global Market Preview, the more you study them, the more confidently you will be able to anticipate market turnaround. Again, just like I could confidently tweet at this point that it was the time to stop buying, look for shorting. I tweeted, and in the last market roundup, right at the bottom, I confidently publicly mentioned that I was starting to buy. Market bread, market ETFs are looking bullish. Except small cap, isn't it? Except small cap. Okay. Now let's look at the market from other angles. Market is the most important level. You will also see that when I'm looking at the market, I'm not referring to economic figures. I'm not looking at research studies. I'm not looking at S&P 500 earnings projection. I'm just looking at what the market is doing in itself and then deciding my bullish bias or bearish bias based on that, not based on S&P 500 earnings projection, not based on what analysts are saying, certainly not based on what media reports are saying. Let's look at the extremely useful sector industry stock advanced decline breadth 1 month to 1 day. Friday is in fact bullish. Though small cap Russell 2000 was weak, overall we can see sector industry stock advanced decline was bullish on Friday. Over 2-day period it is bearish, but the weekly period 5 days, that is bullish. 10-day is also now bullish. 1 month is still bearish. So longer term is bearish. In the previous market roundup we saw it was more red. Now it turned more green. Weekly period is green, Friday is also green. So based on this study, weekly period green, daily period green, we are going to look for buy setups. What is the reading from the bucket analysis? Is it overbought? No. The percentage of stocks in the most extreme upper bucket nowhere near 30-40%. Oversold? Certainly no. 45% of S&P 1500 stocks are above mid-Bollinger Band. Slightly bearish still, but it has recovered a lot, isn't it? Right when the percentage of stocks in the lowest bucket hit 50%, I mentioned recovery was expected, the recovery came. Where did the recovery stop? It seems recovery is stopping near the mid-Bollinger Band. Therefore, there is a chance when I look at the bucket analysis in that way, it went to, in aggregate, the market went to lower Bollinger Band, then it came to near mid Bollinger Band. It is possible that market will turn down from here, giving a lower high, lower low. That is something to be kept in mind, though looking at the market ETFs, looking at the market breadth and sector industry stock advanced decline breadth, currently I am bullish. If it tilts down, we'll have probably a swing short setup. That will be a trend following short setup in several stocks. But that setup has not come yet. As of Friday, it is looking bullish. What about technical breadth? Let's look at the daily picture. Daily picture with all signals, you may say it is mixed, slightly more bearish than bullish, but we may say it is mixed. We have bullish strength but bearish reversal, and bearish reversals are significant in relation to the bullish gap. So we have to say strength and reversal together is bearish. Trend continuation signals are also bearish on Friday. Overall, it is slightly bearish. You may say little bit bearish, not much, 54% bearish. That is the Friday's signal. And if I look at the weekly period though, weekly period is very bullish across all the categories. All signals 84%, strength signal 87, trend continuation 84, reversal 81. So weekly is bullish, daily is little bit bearish. What is my preferred trade? My preferred trade is that Monday turns bullish, that will give me a swing low buy point. Also, if I look at the percentage of stocks displaying bullish headwind, it is at 1.1%. It was even higher earlier. Market recovered somewhat, but still the weekly bullish headwind is above 1%. That is also telling that it is possible, quite possible, that market will go up from here for swing trading purposes. So technical breadth is also telling me that preferred trading direction is bullish. We could look at some of the stocks giving buy setup, but before that, let's look at some of the stocks I shared publicly. And one example I'd like to take from this Q360 degrees trading techniques and ideas category in my website sagannandy.com, that is KLIC. Here I recorded the complete trade cycle. First I shared it November 17th. I posted it on November 17th, but the first time I mentioned the stock KLIC was in my market recap on November 13th. That was the time I showed that KLIC gave a breakout long setup, and I mentioned that on Friday itself we could buy, and I also mentioned that I did buy KLIC on Friday itself. That was the first time I shared the stock. Let's look at the chart now. Okay, let's look at how I followed up first. Okay, this was my buy point. I explained that I bought before earnings. The fundamentals were very strong. I had a position using call options, naked call, that I closed just before earnings when it hit the upper boundary level. I had a 15% profit in the call options. I did continue to hold a stock position with my stop below the swing low when I bought it, and the exact level would be decided by the Q protection signal. In the next follow-up post, I mentioned that my stop was not hit, which would be somewhere here. Instead, price broke out of the trendline resistance sharply, and on this day, the GTC order, good till cancelled order that I had to book partial profit, that was hit. That was at a price level where my reward was equal to the risk. Partial position was closed. Then what did I do? I showed in the Q stop level chart that I moved stop using the protection signal after booking partial profit, and my entry price was here. The stop was slightly below break-even price on the remaining position, but I already booked partial profit at a higher price. Therefore, even if this stop was hit, I would exit the entire trade with a profit. What did I do after that? I followed up on the chart. Stock continued to go up. Then I noticed that on this day, price sharply went up but then closed lower with a topping tail candle. My remaining position profit target was near a watermark level, that is around this point. It came very close to that profit target but did not hit it. I don't track my positions in real time during the day. I had a GTC order for the remaining position that did not hit, and it created a topping tail. Looking at that, I moved my stop up using the protection level again. And now my protection level stop was much above my buy price. It was even above my initial profit booking price. So if the trailing stop was hit now, I would exit not only with profit but a profit that would be bigger than the risk taken in the trade. What happened after that? Very next day, that is Friday, price came down and hit the trailing stop. So I exited my remaining position at that point. This is how I started the position at this point as a breakout trade, booked partial profit when reward became equal to risk, moved my stop to very close to break even, saw a topping tail candle, moved my stop up using Q protection level again, exited the remaining position. This was, I think, a great example of disciplined trading, taking the trade without unambiguity, using a breakout setup, booking profit with discipline, and then managing the remaining position with discipline as well. Exiting, final exit is also with good discipline. Now let's look at another stock, and it's useful because I share all my trading analysis before knowing the result. It doesn't matter which country they are on, so long as they are liquid, we are able to use the Q systems and techniques. This is another great example of disciplined trading. I shared it on November 29th, how to find a dividend play and buy it at the low in any country. It was Bpcl, an energy stock in India, liquid stock. The oil and gas refining and marketing industry was not the strongest in relative score, but the pace column was showing it was accelerating. The stock was up on the day I shared it. good earnings quality, earnings growth, funds were accumulating, all the peer stocks were up. And notice that I mentioned it was a dividend play. Let's go back. 8.9% dividend yield with high earnings quality. So this is a nice dividend play. We need steady earnings quality to have confidence on the dividend, and the stock had that steady earnings quality, high dividend yield 8.9%, and the stock is expected to be at a lower price level. Let's omit the seasonality chart. The stock was indeed at a lower price level. It came down. I pointed to the congestion area in the weekly and the fact that it created a bullish indecision at the bottom with a bullish shape candle. Daily had bull release, bullish pressure, bullish U-turn, heavy activity. So using weekly daily, I mentioned I could apply the box long trade setup. Also in the alternate signals, we saw low jump and thrust overextended to the downside, from which a reversal was likely. And see, when I shared it again before knowing the result, live analysis, I caught the very bottom of the stock. Would I know if it would make profit or loss? No, but I knew that risk was small. It was in an accelerating industry, great fundamentals, especially dividend wise, technically narrow stop entry at a point where it was low jump thrust level. What happened to Bpcl? Let's look at Bpcl now. I shared the buy idea on this day. Since then, it has steadily gone up. In fact, it had a trendline resistance. In the previous market roundup, I mentioned that even if it hits the trendline resistance, I would cover my risk distance. It did not only hit the trendline resistance, it broke the trendline as well. So there is no resistance now. Traffic light is green. For all the days since I shared and took the long position, Friday's candle color shape both are bullish. So once again, I could confidently apply the system and technique that I use. That is important. If somebody is confident, one should be able to share the ideas publicly before knowing the result, not after the fact. Bpcl is another great example of that. Let me share one more trade that I posted on the forum. Again, I think perfect timing. That was on Intel. I mentioned here is a semiconductor stock buy, except that industry is not strong. That was 5 days ago. QH showed the industry was not strong, neither in terms of relative score nor was there any acceleration. That's why I mentioned industry is not strong on that day. However, the stock itself has great fundamentals, excellent valuation, excellent earnings growth. We can see that from the year-on-year quarterly earning revenue growth as well. Therefore, it was a 3-star candidate. Peer stocks were generally up. Then I looked at the Q charts. Once again, the trendline support in weekly came handy. Price came right to the trendline support, created an indecision doji candle with bull release. Then the backdrop color turned bullish, and just before that, we also had a bullish headwind. So bullish headwind, then a bullish indecision, then bounce from trendline support with backdrop turning bullish. So if I bought, I would be careful about the trendline resistance, nearby, but that distance was enough for a swing long trade. That was the weekly backdrop analysis. In the daily, again, I think I caught the stock on the perfect day. It was moving inside a range, broke out of that range, broke out of the triangle pattern, broke out of the trend line resistance with a not only bullish traffic light but bullish flow with bullish pressure. Breakout with bullish pressure in a strong fundamental stock, reversing from pendulum low. That gave a breakout setup in daily. And further, I looked at the alternate signals. Bongo turned green, momentum signal, broke out of the channel breakout, low thrust, not low jump, but at least low thrust, extended to the downside. 3-month big move up. We saw in the previous chart, it was at pendulum low, reversing, and 3-month big move up. As I mentioned over and over again, 3-month big move up at pendulum low, most likely it's going to go up. Then we had trendline breakout, triangle breakout, channel breakout. Then we had Mobo breakout from a squeeze with a kahuna. I think we had everything that we needed to buy. Yes, the industry was not strong, but everything else was strong for the stock. And how did the stock turn out? Let's look at Intel. This was the day I suggested the breakout buy. It had a trendline resistance at this point, and we were aware of this trendline resistance. Stop would be just below this candle's low, the entry candle's low. Let me clear the pointers. Because it was a breakout trade, and one gentleman actually asked me in a recent one-to-one webinar that where the stop would be. One reason I avoid breakout trades is because stops may not be nearby, especially box breakouts. Trendline breakouts or triangle breakouts may still give a narrow stop long entry. So in this case, we had two ways to decide stop. One is protection level below trendline support or protection level below the entry candle. In this case, I mentioned to that gentleman that I would apply protection level below the entry candle because below the recent low would be too far. And it was a breakout setup. If it could go not below the entry candle's low, by the way, not below the entry candle's low, but below the entry candle's low at the protection level. The protection level is safe distance away. That was where my stop was. Very next day, it gapped up and covered my risk distance, so partial position would be closed using GTC OTC order and the remaining position could be closed using trailing stop. Certainly one would not allow the remaining position to go into loss, so the entire trade as a whole would exit with a profit. Once again, a swing trade identified as a breakout trade with multiple momentum signals that exited the very next day, majority of the portion. I usually exit 2/3 of my position of swing trading at reward distance equal to risk. So it exited once again with profit. Once again a trade that I shared before knowing the result, and once again a trade that I shared long idea in the current week when others were not yet confident to buy. Now, are there buy setups now? Probably. Let's look at I am beyond 1 hour point. Okay, let's spend a couple of more minutes. Let's look at sonar. Let's look at the particular sonar that helps me look at trade setups, and not only trade setups, stocks giving maximum trade setups on Friday. Let's add the custom symbol list that I have, stocks with liquid options. How many stocks do I have here? 363. And any stock that has a long or short setup will come to the top. Further, stocks with maximum setups will float to the topmost rows. Let's wait for a few seconds for the data to be retrieved in real time and every calculation to be done. Friday, we saw from technical breadth, overall it was bearish, but I am not going to look for bearish trades because my market view is more bullish than bearish. I am going to look for buy setups. Let's see if I find any. If not, that's fine. We can look at it after market opens on Monday. APA is giving a possible buy setup, a pullback buy setup. Let's look at the stock. Apache. It came down to the yellow direction line, found support there. Overall, it is in an uptrend, closed with a bullish shape, bullish color candle on Friday. So technically, it is giving a pullback setup. Would I enter the long trade on Friday? No, because there are two trend line resistances nearby. It closed higher by 4.4% on Friday. That's a good performance for a day. So in this case, because it is giving a technical buy setup, I may look to buy if the trend line resistance is broken on Monday. But before doing that, let's look at its fundamentals and industry strength. Fundamental scorecard is calculated using Q Vital, fetching the data from Refinitiv. Well, it doesn't have good valuation but excellent earnings growth. Funds are accumulating, robust earnings quality, short squeeze potential. So it's a one-star candidate. Plus we have fund being bullish and short squeeze potential. What about the industry? I can look up the industry relative score from QH. These systems are integrated. Industry is looking bullish. Oil and gas, exploration and production. Friday's industry score is among the top 20% of industries. Friday's industry acceleration is also among the top 20% of the industry. So both acceleration and strength allows me to buy. If I look at the graphical representation, then I see that on Friday it also went up in absolute terms. Not only relatively, the industry was one of the top 20% industries, it actually went up. And we can see 68% of peer stocks were up. So fundamental, industry, technicals all are allowing me to buy provided it can break out of the trendline resistance on Monday. That is how unambiguously with multidimensional analysis, market level, industry level, fundamental level, technical level, I am able to, and you are able to decide trades. That is how I found trades like Bpcl, like Intel, like KLIC, and the same technique I am applying to anticipate a breakout on Monday. If the breakout doesn't happen, I don't have to buy, but if the breakout happens, my stop is narrow in this case, I am happy to take the long trade. Let's look at one more stock. I don't want to take too much time, it's beyond 1 hour. You see, Friday was overall bearish in terms of technical breadth. However, my bullish view is there on the market. So I'm only looking for bullish trades. Apache was one. Let's look at one thing you notice. If you look at this sonar, the industry column, there are several oil and gas industry stocks here. Let's look at this stock. It's up a bit more than I would like 9.6% up on Friday. Ford Motor Company. Remember, when I studied market breadth, what was my conclusion? I was going to favor non-technology stocks. I was going to favor large cap stocks over small cap. So Ford will fit that criteria. General Motors will also meet that criteria. Both are in the same industry. That is also good to have. Both of them have a trade setup. Ford, I can see from Sonar, has a, from here if I point out, has a breakout. General Motors has a trend following with flow setup. Both are up by significant percentages. So that will be a reason to look at both of them. Let's look at Ford. Excellent breakout, isn't it? Breakout on Friday, bullish flow, very bullish shape candle, weekly bullish backdrop, bullish reversal also in the weekly, bullish pressure, very high volume. Prior to that, it was in a squeeze. In the alternate signals, 3-month big move up, very bullish signal with a Mobo breakout from a squeeze with a Kahuna plus one pocket pivot, PSAR reversal, Bongo turned green. Plenty of buying signals. What would be the perfect buying point? Right at the point it was breaking out of trendline resistance. Remember, just now I showed APA and I mentioned if next week, say Monday, APA breaks out of trendline resistance in real time, I could buy the stock. Using the same concept, you could buy Ford. You could identify it as a breakout using this real-time sonar that I'm using. You could buy right at this point. Now, before that, I would like to check Ford's fundamentals. Let's do that. Ford and General Motors are in same industry, so I can look up the industry together. Ford's valuation is medium, earnings growth poor, revenue growth negative, fund accumulation yellow. So fundamentally it is not one of the strong stocks. What about the industry? Let's check the industry. Industry is one of the strongest. We have 147 industries at present in USA market, and automobile manufacturers 145. So it is one of the strongest and it is accelerating as well. Because the industry was strong for a while, little bit of weakness in the middle and back to strength once again, both in terms of relative score and acceleration, it is expected that the stocks will be at a higher price level and not undervalued anymore. That was true for Ford. What about GM? GM in the same industry. I don't need to look at the industry again. Industry is very strong. Let's look at the fundamental score and also look at its technical charts. Trend following with flow setup. This is a setup I prefer more than the breakout in Ford, because Ford will not give me a low risk entry point now. It could be bought on Friday in real time using the trend line breakout setup, but not now. Now the stop would be far. Let's go back to Ford chart that is open on QLit. It already went up significantly. In fact, on a closing basis, more than 10% up. Stop would be far away. That's why I would not like to buy at Friday's close. I could buy on Friday in real time just when it was breaking out, not at the close. This is Ford. But look at GM. That is the application of Q setups to locate low risk entry points. GM is giving a trend following go with flow long setup indicated by the green ribbon. Weekly is green, cyan actually, that is allowing a go with flow setup. All checklist conditions are met. And if I anticipate a move at least up to the upper boundary, the risk distance will be covered. So this has a good reward risk ratio. Also I see while it is giving a trend line support up move, it is also going up from the yellow direction line, currently going through long setup. In the alternate charts I see it is also a breakout in terms of channel breakout. 3-month big move up, very bullish momentum. Mobo breakout, Kahuna, pocket pivot, PSAR reversal, Mongo turn green. So in the alternate charts there are many momentum signals or strong momentum signals common between Ford and General Motors. Ford is giving a breakout, but it's a bit too late because top is far away currently, but General Motors is giving a very nice buy setup. It could be bought using real time during the day on Friday. It could be bought at the close on Friday itself. What about its fundamentals? Let's check that out. For Ford, fundamentals were not so good. For GM also it is very similar. Valuation is yellow, earnings growth not great, revenue growth not great, but here funds are accumulating. That was different for Ford. Here the fund score is cyan. That was not true for Ford. So both technically as well as fundamentally, I will favor General Motors over Ford. That is how you can identify buy setups confidently, irrespective of what others are saying or what media is saying, whether newspaper is saying market is bullish or under pressure. You don't need to think about that. You just do your analysis yourself, establish a directional bias and look for trades in that direction in terms of fundamentals, technicals and industry strength. You will most likely be able to find trades like that every week, if not every day. As is shown by the setups that I share on my public forum and Twitter page. I'll not take more time today. Thanks a lot for attending. I look forward to seeing you in my next public session that will be next weekend market recap. Once again, have a great weekend and trade profitably. As I always say, no reason not to do that. Thank you.